Welcome to a new episode here in the Energy Bridge. Today we're going to go into energy markets. We have here two experts, Thomas in the modeling and long term, and Nikolaj, expert in real-time modeling in energy. So thank you very much for coming. We are very interested in this topic, especially nowadays with flexibility, all the grid. Today we're going to be in the electron side, right? So we have managing a lot of challenges. So happy to have you here.
Great.
Thank you very much, guys, for joining. Especially your two dual different combo. Thomas, I know personally as well, but thank you very much, Nikolaj, for joining, and Thomas.
Sure.
Please go ahead, introduce yourself, tell us about what you do.
Hey, Nikolaj. From CyberGrid. Slovenian, working for an Austrian company. CyberGrid is focusing on flexibility, so managing it and then also trading with it on different markets. Austria is our, let's say, core, and then Germany, Bulgaria, Croatia, and so on are the other markets we add. Yes, personally, I'm from a mathematical/statistical background. Yes, so it's interesting from my perspective to look into energy world and also then on the economics as we'll touch today.
Amazing. You, Thomas.
Great. Yeah, my name is Thomas Rosenzopf. I'm working at Enervis. Enervis Austria now. We are an energy economic consultancy based in Berlin. But now I and the colleague, we opened also an Austrian branch at the Climate Lab. And yeah, my background is energy, technology, and business economics. I studied at the TU Graz and was a tutor at the Institute of Business Economics and Engineering. And there I was dealing a lot with modeling and working also with the institute, but also my master thesis in that. And so I wanted, after my studies, I wanted to bring together those energy-related topics, which I was really interested, climate, energy transition, and as well the modeling perspective. So I ended up looking at jobs, and it was not that easy. And so 5 years ago, I moved to Berlin, starting and looking for jobs at consultancies which do modeling in the energy transition. And I ended up being at enervis, which I really loved. And had a really great opportunity. They are a growing company, really nice topics, the Greens in the parliament, a lot of work to do basically.
Wow. Were you in lobbying with politicians?
We made some projects for them as well, but mainly we are a consultancy for utilities, project developers, marketers. Yeah.
Interesting. So you went for it. I mean, you looked for joining this both.
Yeah, I applied for 3 different consultancies in Berlin, and took this offer, and I'm really glad.
Okay.
Started off at the Enervis. Yeah.
What did you study again?
Mechanical engineering and business economics with a focus on energy technology. Yeah.
Wow. And where did you study?
TU Graz.
Okay. Yeah, interesting. And for you, Nikolaj, so all you studied were in Slovenia?
Yes, Ljubljana. Yeah. First at Mathematic University, and then Electro University hosting statistics.
You're our second Slovenian guest. We had Marko. Actually, I mean, that's the CyberGrid connection as well. He was the ex-founder of CyberGrid.
Uh-huh.
And with him, we said that Slovenia is the country of researchers.
Researchers?
Yeah.
Okay.
I mean, Acer is there, right?
As well, yeah. I mean, in my experience of researchers, I also would need to, put their Slovenia next to Portugal. They are very heavy in research, but I like that Marko said this, and yeah, sure, it must be true then, yeah.
But how did it for you? And this is your first international company that you're working on, or you had some other experience working?
With my background, my first job was in banking. I really use the system in Slovenia well, which is really promoting students to work a lot next to your studies, of course, and then I looked into let's say utility company at first, and then went to banking, the modeling, the risk there, At the end, I didn't want to do this full time, let's say like this, and then I was searching for other jobs. The story of how I got this job was quite strange because I'd never even looked at the let's say energy sector before, and I just met the co-founder, the other co-founder, Peter, at a diner. We were both having lunches, not knowing each other, not aware of each other, and we were sitting like this, and started making some jokes over the table, like you do in a diners. And then we started debating also about job, like what do you do? It's typical man's conversation. We always go for some job.
That's what we talk about.
Exactly, right? And at the end, I kind of said, yeah, I'm looking for some jobs, and he said, oh, yeah, just send me an email. He gave an email. I'm like, okay, thanks a lot. I guess this will never happen. I mean, for sure not. But I wrote an email, a proper one with CV and everything, sent it to him. 2 days later, he responds, yeah, sure, when can you start?
Wow.
And you're still having lunch in the same place?
No, I never had lunch after that there. So it was, and also, so it was pure coincidence, but it was a good one for me, and I hope for the company as well then, yeah.
Tell us about your role. What do you do?
Yes, so I started at CyberGrid as a project manager, and I still do this role to some extent. So let's say Bulgaria expansion there, I coordinate. But then, so knowing my background and seeing the potential for working with the data, I then and with the colleagues, we tried this building up the so-called market intelligence. This is a team working with different, mostly open source data. And then with that data, let's say from different prices around different countries, different markets, trying to understand where we're going and trying to also build some business cases with the potential, let's say, assets, let's say in Austria, for example, where we already are, or just understand different markets and the behavior there, and is it feasible for us as a company to maybe invest, go to check it out and so on, or not. So this is then basically what I do. I lead now. Yeah.
Out of curiosity, how is the current state of technology to measure real time? Because you have to bridge digital world with real assets like heat pumps. How does it work? The sensor of heat or current?
I think in this sense this was never a problem in the electro engineering.
Now it's solved.
No, it was always there. It was very like fast, I would say, in a few seconds, very detailed set of data. However, what has changed a lot in the let's say 20 years, the last 20 years, is that now the IT guys came in this sector, right? And now we have a lot of protocols that are internet based. Example, I think a good one is MQTT. So now everything is fast and internet based, which is very good because then companies like ours takes this and goes over internet to an asset in let's say Mayotte, this island country in the Indian Ocean, and we had a project there and we connected to the assets there and tried to manage there. Maesha is the project, you can check it out. But basically,
Wow.
IT
real time to operate real time remotely.
Yes, in let's say 2 second, frequency, no problem. Yeah. I mean, no problem.
Yeah,
Many problems, but it can be done.
It's very interesting. Could you walk us through the technology, how exactly it works?
Well, we would need an inverter guy, so who actually builds the, let's say the smart part of the asset, right? Let's say PV, and then you have the inverter. And there starts, right, everything. So because this brain of the asset is where the data is generated. We cannot collect data if there's nothing there, right? So
that's for other episode.
Yeah,
the guy inside the inverter.
Super. So you have that, yeah. But from there, so we just basically connect to the assets. Some are smarter than the others, let's say. So, but we take the data and then we just communicate with them. So let's say MQTT, as an example once again of the IT part, is just that each part, so the asset, the inverter, and on our side, our system does the talking for some part and listening on the other side, right? So it's like a conversation we're having now, but by internet into devices in 2 seconds. So it's, and of course, what at the end makes this possible is that there's the standard, right? There's the MQTT standard, which let's say both sides need to agree on, and then this works.
And now going with Thomas, with enervis, What is the role of enervis in the market?
Yeah, the not the operational questions.
Yeah. That's why it's complementary.
Yeah, it's
That's why-
complementary, and it's like it's really interesting to also get some insights in this as well. But we are looking mainly into this kind of high level macroeconomics and how it impacts macroeconomics. So how it impacts the assets. So we do long-term power price scenario modeling. So we have a large fundamental model, which is basically putting together supply and demand in each hour until 2060 or each quarter hour right now, because we changed to the quarter hourly day ahead market. And we look at different scenarios, how the energy transition and assets, demand, let's put it like electrolyzers, electric vehicles, heat, electricity demand is evolving over time on a daily structure into the future. And how is that met with supply side, with renewables coming into the grid, more batteries, less coal-fired power plants. I mean, you know the topics. So we put all this together and put it into our fundamental model and look into the future. How is that change ending in a different kind of power prices structurally? So we look at daily structures, we look at monthly structures, and sure, we look at the average annual prices, and with that kind of basically quantitative data a lot for each country, each power price zone in Europe, we do support investment decisions, strategies for utilities, asset deals, due diligences, whatever you want. And we provide this outlook on a quarter hourly basis with updates for each country in Europe, where you can make some calculations your own, or we do the business case calculations, all this stuff.
Who are your typical clients?
Most of the clients, I think, are still utilities. It was long the basic base our service was made for utilities, but later, since I started, we have much more banks providing debt financing for renewables. We have much more investors having like venture funds want to also invest in renewables because it was like green. But still, we also have project developers setting up their assets as best as they can, also looking in the power prices, looking in the markets. This is especially relevant for battery, as they are really market dependent. And sure, we also work for associations for political players more. This is our own team we have. Yeah. And also what we also do is gas, whatever comes with gas and heat. But it's not my core business personally.
Okay, and just with this long term in energy after COVID and everything that have happened in Europe, unpredictable, right? And super
you can
dependent.
I always like to say we can model everything. So if we put the gas prices and what we've seen in the past into our model, we quite accurately see the prices there, what we see on the market really. There is some offside because there is opportunistic bidding behavior from some gas-fired power plants, from some other assets. This is not really rational, we like to say, but still, if we have this kind of scenario set up into our model, we're quite good in really putting out what was really there.
Yeah.
For sure, we do some backtesting here and look how good is our model, how accurately are we hitting these real prices.
So with this energy oracle of prices, if you see the previous reports, like the ones you did 5 years ago or even before, how do you see how accurate they are after passing 5 years or 10 years?
Okay, so I mean, what we quite good at, and what we would, I think it's almost a lot about the scenario and political issues as well. So the political things change really fast nowadays. But if we look at kind of these baseline scenarios we had when I started, the rise in negative prices, we predicted really well. Also the fall in capture prices for PV especially. We did not see so many batteries coming and stepping into the market.
Okay, that
was really fast so far, and we also debating how will we in 5 years, because there's so much in the pipeline. What do we see in 5 years? What's also a bit of a surprise is how fast, especially in Germany, wind is developing. How big is the pipeline? How many of those assets can come online in the next years? This was not. We were already quite progressive in the build out, but they're still over it, so above. On the other hand side, demand, we didn't predict that kind of crisis we are in right now with the industrialization not having this kind of large demand, especially the automotive industry. So this is more a macroeconomical like assumption for our scenarios. But if we would be right in all those assumptions, which you couldn't be, sure. But if it would be right, we're quite accurate with predicting the real power prices we see in the market. So it's 1 to 5% off in average.
You are working with banks as well.
Mm-hmm.
And that enables more investment for any transition. So what do the banks want to hear from you?
Yeah, I mean, that we're reliable, that we know the markets, that how big is the risk. They always want to have this Gaussian curve.
Risk first.
I would say that more first of time, how they want to ask if you understand the markets, the kind of fundamentals, the regulatory framework. I mean, this can be quite basic, and then they look really. And I had a lot of discussions with guys like you, more senior, I would say, at large banks. They asked about, what kind of modeling do you know? What kind of accuracy, backtesting, but also accuracy in the bidding behavior of different asset classes, how you set up that. And in the end, they always want to have a Gaussian curve. And what's the 25% quintile that they won't get their loan back? I think that's always the questions which they want to hear. But still, it's also not about... there can be a war again or whatever. So this is a scenario game. So we can set up a lot of scenarios, weather sensitivities. And in the end, this is kind of what you believe, how the future is evolving and what's the quantile. This is a large discussion. Still, they're financing a lot of assets nowadays, especially if there's some kind of revenue security. We can talk about it later, I think.
Maybe just I point something out that I think it's very good that we went in this direction because the risk is something everybody, also us, when trying to discuss with, let's say, potential customer or a new client and new country. This is the question, right? How can you guarantee the prices will stay the same? And we try to do that, but like Thomas said, batteries are coming fast, right? So, we try to do something, but then the risk question is always there, and securities, let's say, is I think then the number one alternative. We try to, and not just us, but in the field, we try to work with that because it's very hard to say it's opportunity and you're not really sure what the risk will go because the market is fast changing. So it's the debate we all have. I think the risk.
I mean, there's also the nice thing about the energy transition.
Yeah,
it's so like changing fast. It's thrilling, in my opinion.
Yeah, and for you, Nikolaj, at CyberGrid, because essentially it's a virtual power plant company managing flexibility a lot these days. So how do you bridge the gap between the physical asset and the complex energy market? The same following questions, because it's not in terms of de-risking the investment now, but de-risking the whole system. So how the process goes in CyberGrid?
Maybe coming to the point of Thomas, you start with the baseline, right? You try to get that right, and then anything can happen after that. Let's say like this, and I mean it's in a good and bad way, right? Because price fluctuation is also opportunity for us to earn money, right? Because our services basically provide energy in times where let's say missing or too much, and we try to help the grid, but also you're paid for that. But yeah, I mean, risk is something like interesting, and also as coming once again to my market intelligence sphere, talking to a lot of data providers, they don't try to measure every height of the let's say price fluctuation. They usually focus on when this will happen, because then this is already enough information that you understand something will happen, and you don't know how much, but then you understand how hard it is to work with risk. That the timing is already like a very good initiative. And yes, so once again, baseline is something we start with the assets, and then from there on, we try to have, I mean, the algorithms are done in the way that if possible, you earn more. If not, of course, then you stay with the baseline. This means usually that our system starts with the head price, which is static, right? This is guaranteed more or less. And then you go to intraday market or these so-called flexibility markets, which are daily and you don't know exactly when you will accept it, if you'll be activated, how will be the price. This is, a post allocated and so on. So this is all, a long, let's say, procedure to understand how much you will earn, but still we start from the baseline.
In long term, so you could predict negative prices, but how do you see in the long term the energy market itself working with negative price? I mean, it's make no sense for people that it's how in the market is negative, but I'm paying the same bill, or which incentives you see in prices in the market in the future?
Yeah, it's a common question for me. And I think it's a really interesting one, because what a negative prices basically, how they come, where they
What
come
it means.
from. Yeah, where they come from. I mean, basically they come from must feed in of some power plants. They have to feed to the grid, and this is mainly kind of heat related or heat stirred power plants, which have to provide also heat. But this is not the big part. The bigger part is fixed PV, which are subsidized and does not have any incentives in curtailing the energy production if there's low prices or if there's already too much into the grid. And this is basically an incentive from a regulatory framework, which we set up 10 years ago or something, and which took us too long to change it. The build out was so fast in the last year that no one expected it really to be that quick, and that many PV plants in that kind of region, regulatory framework coming online, need to feed in that kind of every hour they're producing electricity into the grid. And what do they do if they have to feed in? They bid as negative as they can, that they go into the grid and have feed in. So this kind of negative price is basically a incentive from regulatory framework, which is ineffective, I would say, to be honest, and it's based on that. And the regulatory authorities, they're getting smarter, thanks, and it's good. And so this kind of they phase out their regulatory incentives for bidding negatively into their support, into their tenders, and also the fixed feed-in for rooftop PV, for example. And so we saw that already in Germany happening. In Austria, it's also coming right now with the LWG, basically for rooftop, but also for large scale PV. I see it in the market coming in the next years. And so what do we model that, this kind of bidding behavior of the already installed plants, of the future plants, and based on the demand. So if there's enough demand, which was so far always the case, so there's not a lot of negative prices. But if there's low demand and a lot of PV feed-in, and we like to call it a sunny Monday or Sunday in May, this is basically what there's, the demand is low, the PV in feed is high. There's still negative prices, in our opinion, in the future if this is coming together. But still, when demand is growing, on the one hand side, PV is still growing, but the incentive is not there to bid that negatively. And on the other hand side, if there's more flexibility, which can charge in those times or make demand higher in those times in case there is a lot of PV, these kind of negative prices is declining. And we already see this in magnitude of negative prices. So we saw 2 years ago -500 in 1 hour, which is crazy.
Yeah.
This is not happening, I think, in the short-term future, because the market has got like the risk framework are better. But fundamentally explained what we do, these negative prices can still be high in the next years, and will be a bit in numbers at least. We see it growing a bit, not too heavily. We had like in Austria, I think 400 negative prices last year, 600 in Germany. We see that growing a bit, but there is a peak point in our scenarios in the late 20s, beginning of the 30s. Where demand is growing, flexibility is coming online a lot.
Demand response
as well, yeah. So those kind of negative prices are getting less in number, and also having less impact in business case evaluations, because there's always a thing. What if you don't get anything for feed-in? You would curtail, and this makes your revenue smaller, and banks, revenue smaller, we don't like that.
Yeah.
You know that. And in the end, this is a huge huge pain point and also discussion how these negative prices are evolving over time. And yeah, this is our opinion on that. And it's different in different countries in Europe, for example. So the peak is really Germany. Italy don't have any negative prices, which is quite interesting.
Because
They
we
have
have
different-
7 systems.
Yeah, they have 7 power markets. They have
Seven
different incentives,
Yeah.
and it's so. This I think is a good thing that you see. Okay, the incentives from regulatory, from tenders, from build out of rooftop PV, how they are incentivized to feed in the grid, is affecting power prices. So this is kind of the interesting thing. Is technology. You have to have your energy management system is technology. How, and it's also economics. It should be profitable.
I just heard from a friend who is in Spain, Alvaro. I hope to have you here in a podcast because he's analyzing Spanish market with BESS and how to make it profitable. And there is a situation in Spain that energy is super cheap because can 10, 11 euros per megawatt hour. But the final price is still 60.
Yeah.
So how do you see in the future, in some scenarios, the idea of getting more renewables, it was supposed to be cheaper, but all the services to make it resilient and secure, it makes it more expensive. So how do you see this counterintuitive situation?
Yeah, this is the call of this cannibalization effect of the renewables. They're eating up themselves or their own revenues, and when they're more, they're setting the price really more often, and so their revenue is declining. What we see basically is like the value of a PV production is half the price of the average power price in the market, which is quite, it's just half of it. And what we see in markets like, which are having a lot of PV compared to the demand, like Germany or Spain. So there is not any build out of PV, large PV plants, which aren't subsidized anymore. So the whole PPA framework, which was a big game merchant PV, is kind of really restricted or close to not happening anymore. And this is, so this maybe put it like that, the more PV we want without any flexibility on the other hand side, which is increasing those power prices or demand in that hours where there's a lot of PV. The more we want to have it now is a lot paid by state subsidies frameworks. So there's auction, there's tenders, and the tenders are really large in Germany, for example, I know. And those assets are built, and also rooftop PV is built. They are discussing now, I'm having not the incentives of building, getting a feed-in tariff for that asset. But in the end, the current status is PV is merchant only, is close to not happening anymore in such countries where there's already a lot of PV. And also interconnected countries to Germany, to Spain. Also, if they don't have a lot of PV, this is the markets are saturated for PV already. What we see now is like, we put a PV battery storage right next to it, and increasing the value of that kind of asset.
Put one comment to this. I think the answer, partly at least, would be so-called smart grid or smart grids, meaning so that it's not going to be enough in the future to just build PVs, right? I see this. So working in Southeast Europe, you see that, now let's say Serbia announces so and so big amounts of, PVs installed, and you're like, sure, but this will be at 12 in Sunday, and then they have a problem, right? You need basically the inverters, once again coming back to the point, smart inverters that can talk and then curtail the assets, or batteries or something else, because if we just scale up everything, then we'll need new cables, new infrastructure, and if we build it up, once again the cycle continues with new PVs and obsolete systems. So we need to becoming smart in this direction.
And how do you see it? Because CyberGrid is part of EVN, like a bigger utility. So how do you monetize this structural volatility? What's the word?
You mean the market one?
Yeah, like how Thomas had explained. So in terms of it's also an opportunity for EVN to make monetize this market, because you have like a bit more information than from from the outside perspective?
Not sure how well. I don't know how much, let's say, we got directly from EVN. However, looking at the market, there's a lot of opportunities for sure. And so one of the, let's say, features we just now published is so-called spot guard. It's a standalone feature curtailing large PVs in times of negative prices. Exactly what I was discussing, because for Thomas it sounds like just a short term until 2030. For everybody owning PVs, this means 6 years of pain. So we need to have some options, and let's say spot guard is a functionality of that. But also coming back to the point that Thomas once again mentioned is this so-called flexibility or smart grids, whatever is there that can change its behavior. We try to connect it and then put it to the market, to the TSO. So let's say TSO's market, APG in Austria. And then this is a service to the grid, right? So basically what we do is we wait for a command of the TSO to say, look, now I have some problems because PV produced 2% more, but this is megawatts now, right? And can you curtail yourself, production, lower production, so that we stabilize the grid, right? That's basically what we try to do. And I think this is, we try to scale this, and not just us. There's also other so-called competitors of ours across Europe. But at the end, this really helps, that then the new PVs still have a place in Europe. And I think this is important. Yeah.
What do you think that is the biggest Europe bottleneck or constraint? It's lack of infrastructure and that is old, or it could be used in a higher level, being more smart, like more infrastructure or more flexibility in software, let's say?
I think, sure, infrastructure, you can always have more, and it's not going to be too much. But at the end, so-called flexibility, smart initiatives, whatever is needed. But saying that, I think Europeans, we are quite good at understanding this and trying to make this work. So I think the biggest constraint for me at the moment is time. We just try to make everything work while we're having let's say invasion of batteries, let's call it like that. And we're trying to scale PVs on the other hand. And we try to, interconnect, because maybe that's something I can say here. So I see a very good initiative across Europe happening, which is this interconnection of markets, happened on day ahead, intraday. And now we're also doing this in so-called balancing markets with this Marin Picasso. And this means that, let's say, French battery can help, let's say Germany or Netherlands or Austria to stabilize. I think this is great. So what is missing is that each country joins, right? And they're joining eventually, but it's a big old system that is trying to renew. And I think we're doing pretty good in Europe. Still, once again, time is, here, we need it tomorrow, right? PVs are producing energy as we speak. Oh, well, not anymore.
Today is snowing in Vienna.
Yeah, so,
February.
but yes, anyhow, so the time is needed that this system gets running.
And what is your thought?
Yeah, I think we need more infrastructure, but I think the smarter we are at using data, using digitalization, using incentives to have demand-side management, to have batteries being smart into and serving not only the market but the grid as well, we need less infrastructure. So the more the smarter we are in using data and also demand-side management, batteries and whatever, and curtailment of PV, the less infrastructure we need. I think bringing that all together is the main challenge of the energy transition. Because if we build so much infrastructure, it will happen, but it will cost a lot. And we're already at that point, grid fees are exploding, and no one wants to pay it. And everyone, energy transition is bad, it's so costly. And if we use the data wisely and use the whole frameworks we have for also your market signals and also grid signals, I think grid is always forgotten so far, was forgotten. And
that also brings my follow-up question to you. In the long-term scenario, in a 2040 scenario, where do you see a scarcity emerging in the Austrian market?
Austria is in a really good state. We have the hydro fleet, which is I think great. We are already at above 90% of green electricity. Scarcity, especially in the let's put it electricity power market, in my opinion, is there when we look at the last 5% of hours where we don't have wind, where there's Dunkelflaute, so called. What kind of production what kind of backup do we have there? And there's mainly two options. I would say it's like hydrogen or biomethane. And if you want to be 100% green, this is the options we have. In my opinion, long-term storage, yeah, you can argue that, but in my opinion, it's more of a chemical carrier, and those kind of chemical gases.
Power to X.
Power to X, yeah, exactly. And this will be scarce in the 40s or in the big late 30s. And so still we have to decide, do we want to go for hydrogen, import it somehow? It will be scarce.
From Chile, we're going to...
Well, maybe Chile is a good country. I think the lowest L2H all over the world. And in the other hand side, biomethane is quite a bit easier because you can use it as a normal natural gas. So we don't have to adopt the power plants. And there will also some kind of, maybe we get something from other countries. So this is easier to maybe substitute. Still, I think the both are scarce. If you want to have a green electricity system, we need some kind of those, and both are scarce. Biomethane, there's different kind of scenarios, how big the demand would be, how much land use it would cost. But this is crazy if we want to do it like that. So maybe Power to X will be a better option.
But
and
also,
this is, in my opinion, one unsolved, a long-term future problem we have.
Yeah, also we have heard in some other interviews that it's not the most efficient solution to get 100%, because the last 7% can be used much wiser in other solutions somewhere else to tackle the global challenge that we have.
And also interconnection is like helps us a lot.
Yeah.
So somewhere in Europe there's the wind and in something. And also the other hand side, which I always like to stress, is okay, what's the cost in the last 5%? What if we want to pay less and don't have electricity? So demand response. Yeah. So what's our price as consumers, as industry, in that 5%, or let's put it 2% of hours of a year? If we want to reduce our electricity consumption, we would need less grid, we would need less kind of backup capacities, and those last percents are really costly. And so I think this is we have to decide that as a community, as a society, if we want 100% always available electricity energy, or if we can step down a bit on some occasions, and then it's less costly.
Yeah, and just to in the same framework of thinking in 2040, do you see some tension in the future for intraday market with market balancing?
Let's say wholesale markets, intraday day ahead, and balancing are well, most assets, especially now batteries, participate in both, right? So this is also what if you're not offering that as a service provider like we are, you're not getting anybody on board. You need to have this interconnection, at least in a country and possibly across Europe, to all markets. And I think this is, if somebody is building a battery, he starts with a day ahead price. This is his starting point, which is fair enough. And how much can I make there? And then he's adding intraday market on top, the volatility, the spreads I would like to capture. And then balancing markets, if, the price is big, so the spread is even bigger there, then I go there. So our software already is going across markets, and interesting now, because if you check the prices of these markets, they are coming, they're let's say being more correlated than they were before, because the assets are going across. I see this. I mean, is it good, bad? I think it's a good one, but still, at the end, it's a dynamic we are seeing with these smart assets, because they can do this, especially batteries once again. So I don't see any let's say infighting, or it can be so-called cannibalization for sure. Let's say primary reserve, it's dominated by batteries, and the prices have dropped, and now the new batteries being built are then because there's so little margin there, they're going into secondary, right? So this is now the dynamic we will see in the also next, I think, years, that batteries will change the structure of these markets, but I wouldn't say for the worse. I think this helps the grid to be more stabilized. Saying that, maybe just one last point. So we are having more batteries that are more capable. We are connecting the grid, so everything should be more stable. Yet, we see big and frequent peaks in prices in demand across these markets. And an example of that is Italy. They joined secondary reserve, and they abandoned it after a few months. I'm not sure how many, but anyhow, when they connected, the price peaked so many times, so often, for so long periods, that they said this is not worth it, and they abandoned the European initiative. So it's interesting dynamics, but I guess smarter guys than me said at the end, the grid will stabilize and become more unionized. So let's see for that.
And also in terms of revenues, where do you see flexibility coming, and it's also changing the new revenue models? Where exactly is generating revenue for CyberGrid as a whole, and also for the market?
Yeah, so I mean, I think at the end, flexibility will be a business case we will need. That's number one, but it will be a growing demand if the asset owners, so the guys providing their assets, can have some revenues, right? If there is no revenue, they will not do it. So like I explained, we go over the markets and try to capture something, but at the end we try to find the best solution for each asset owner, and and when we capture some prices, then they also say, okay, yes, this can be added value, because usually people don't know about flexibility markets, and most of the guys coming from a trading perspective, they start with wholesale markets, right? They had intraday. So to change their mind, to go also to the balancing, they need to see some benefit in that. But and they do, yeah. At the end, I think there are many good use cases across Europe happening as we speak. People joining the flexibility markets as well with their assets.
Or what do you think that the system need the most? More batteries or more price signals to be more efficient, resilient, cheaper?
I think,
or both can be.
Yeah, more price signals first, and that will bring more batteries online. The thing is that the battery can own on different markets revenues, and we're not finished with that. Mm-hmm. So you have the grid services. There will be new grid services, I'm pretty sure. Flexibility services which a battery will provide for grid stability, which we don't have yet in the market. Inertia, for example, is established in Germany. Black start capability, so if there's a blackout, kind of what do the battery can maybe also help here. And these are price signals from a security of supply perspective, grid perspective. From a pure market perspective, I think batteries are always following price signals, and so the price signals are first, which we've seen in the last years. Mm-hmm. And from time to time, more players. There was definitely volatility. Prices on intraday spreads are high, and spreads on intraday and day ahead can be compared really directly, I think, to revenues of a battery. Mm-hmm. Not if it's a larger battery with a C rate, a lower C rate, or a longer capacity, it's not the case anymore. But if it's a 1-2 hour battery, it's pretty accurate. So you have these kind of price signals, and then the system, and that's a market, is adopting. And if it's a wholesale market like we have, I think it takes some time. It needs some stability, it needs some revenue perspective, and then it comes to also financeability, bankability, because there's always a bit of a missing part. Mm-hmm. Because there will be revenue, there will be a case, but if the revenue can change really quickly, because it's a fully merchant market asset and revenue, then no one wants to finance it and get the money into it because it's too risky. I mean, that's always like the first movers in a battery case in Germany. I don't know how high their IRRs are. So this is first mover, and they come home after 2 years with financed asset. This is the first period, and now it's getting even more and more players coming into these markets, Austria, Germany, and other countries. And now it gets the whole system gets more pressure, and also price signals are not that high anymore. So now, okay, market is going after price signals, and now we see maybe again the other way around, and there's too many coming online.
Considering that, would you rather own a 50 megawatt battery storage or a 50 megawatt VPP portfolio?
The reason behind it, for us as a modeling perspective, it's the same.
Is it
for to optimize that asset is a different picture. I mean, that's Nikolaj have to explain that.
Yes.
For me personally, I would rather own a big battery, to be honest.
I think so. Bigger battery. So let's say one asset. Big asset usually is a better way, because you then have less work with it. But I think our specialty in CyberGrid is to having different diverse assets connected. So I think I would go for that, because I think there's the intermittent, let's say, collaboration across assets we do quite well, and I think they can get better results at the end. However, if let's say portfolio would mean more asset owners, then I would still go with one asset, because usually at the end, if you have
problems with.
Yeah, I mean, at the end, it's so it always brings.
But still, we try to analyze that from a systemic perspective as well, and on a grid level, a lot of smaller batteries are kind of a bit better for the grid stability than a large asset, because of the ramp-up curves, and also there's knots into the grid. So a VPP from a systemic perspective would be slightly easier to handle from a grid operator's perspective.
Yeah, and just coming back that you mentioned the risk of cannibalism in BESS installation. How do you convince a bank to finance highly risk and expensive assets as storage?
Yeah, there are several ways. I mean, the pressure from the market have to be really high. We see that in Germany they do so far now. In Austria they still not doing it if there's no security, because if there is a large market, also the bank wants to participate, and so they're taking more risk, but they're still assessing those risks really carefully. And what we do, we provide 2-3 scenarios to them. Okay, what could be a potential outlook for those kind of battery asset? And so if there's the low volatility scenarios, we like to call it, if there's low revenues for a battery, is still serving those kind of debt financing redemption, they financing it, and they want to have a cash sweep. So if there's more revenue, they all want to have it in the first place, that they having those risks really fast away from their portfolios.
But what happens to the business case, because everyone would like to build the same asset, same portfolio, similar portfolio?
Yeah.
So Bulgaria is interesting use case. Yeah. So they subsidize a lot the batteries, and I mean I have no numbers, but working there, I mean I have not seen somebody building batteries as fast in Europe, at least.
How much? How many?
I don't know, but
Okay.
I know let's say it's I'm getting emails about a potential customer of 100 megawatt of battery. Like,
Wow.
this is one. Like, and then they're coming. It's like, please check it. I haven't done the research well enough. But and they're building it, and they're building batteries like fast and quick and good, I say, and with PV, so collocated use case, and they're I don't know. I don't know exactly everything. Maybe you can help me. But I still see the market is there, and let's say Bulgaria is also a market that needs this a lot, right? So it might not, when we think about building batteries quick and fast, we're thinking about maybe Austria, and it's, well, you have a lot of HPPs, you don't need batteries so much. However, looking in these countries, at this rate, they still need years that they come to the point, at least as a region, to be, on the flexibility level they need, because they are pushed to phase out the coal plants, but they don't have any backup. Let's say I know for Serbia, I remembered. So everybody was talking about PVs. So I was where we met at a conference, right, in Belgrade. Everybody's talking about megawatts and gigawatts of PVs, and at the same time talking about they will phase out the coal power plant, which is very green. but the coal plants are usually the cornerstone, the stable one that on which
the inertia of the
on which you build your energy system. So they need batteries a lot. So I think in these countries, banks can build batteries a lot.
What do banks look differently in different markets? So if there's the FCR market, the balancing service markets, they are smaller in every country than a wholesale market, than the day-ahead market. So the saturation is way further away in a deeper market, even if there's a lot of batteries coming. And so if the revenue is already high enough to only be profitable on a day-ahead market, for example, which is the case in those countries, on the day-ahead market, the volatility will stay and the market is pretty cheap because all the electricity is traded there. A bank sees those kind of revenues more secure, and it is easier to be convinced to finance such assets. Still, it's a lot of work to do, I would say.
In Bulgaria, there are 10 gigawatt hours in pipeline.
Wow.
So that's a lot. And now that we went into CEE region.
Just before that, I wanted to ask one more question to Thomas about the financing part of it. But what do exactly the EPC and the developers require to finance the storage? What are the usual requirements that they to make to show that this will be profitable?
They need to calculate a business case which is profitable for the bank and the debt financing part of the bank. Not worst, but worst case, I would say. So do you have to calculate and see the outlook? Okay, there's low demand, there's a lot of batteries coming online, maybe in the future, and not so many PV than we think. And in the end, this business case for the battery have to be the price in the bidding behavior slightly positive. So what we see is a large amount of really low prices below, let's say, 10, 15 euros per megawatt hour. But not negative prices anymore. So negative prices are somehow declining again, but the general shares of low prices, we see them because of the renewables having low or little or zero marginal costs. We see those kind of shares in the electricity price formation increasing.
Now the big question, if you have 1 billion euros to put into energy transition, what you will do with it, starting from Nikolaj?
I would split it, and half goes to assets. I would build different kinds of assets, not just batteries. Let's say also CHP. I think that's my favorite. Let's say personal. However, half of this money I would put to building data centers. I think we touched about this before the podcast about the data collection of data, sharing of the data. I think the transition we are talking about is founded on data. And I'm looking across the ocean, and the Americans are very good at this. We are lagging behind. So my bet would be, heck, I would even put entire billion to putting data centers across Europe. Yeah,
interesting. I see that this kind of attitude is more coming from the southern eastern and central eastern European countries, and the data centers are kind of a pariah in the West. Why do you think that's going on in Thomas?
Why? It's a good question. They were progressive in investment decisions. I don't know.
No, but what would you do with the billion?
Yeah, I think the ecosystem of data, we need to have standards all over Europe.
Interoperability.
In reliability, interconnections, and the same standards. And I think if we have the ecosystem with the same standards, a lot of problems are already solved. So it's a more wide social investment, which I think is crucial for the future as well, of demand side management, demand responses, grid services. So if there's an ecosystem which shares different kind of standards, a lot of things are getting easier, and the billion is wisely invested. Sure, asset class now I would go for a battery as well. I think this is short term quite good. If it's going online next year or something, I would go for a battery. Still, at the more larger share of the billion, I would to have this kind of overall European framework for an ecosystem about the data in the energy transition.
Amazing.
What do you think that the promise of cheap energy with renewables is going to be accomplished, or it's just a promise?
It's going to be accomplished. This is based on fundamental power market modeling and also grid modeling. I think it's accomplished if we have a slightly higher willingness of demand response from consumers. Then we can really save a lot of money based on really low cost of renewables. If we're just consuming energy whenever we want to, the kind of backup costs for that are really increasing the average value of the power system, of the system costs. And so the system costs are lower when we're a bit more flexible in our consummation of electricity. And this is, I think, the key. If we are that, we can really lower energy costs in the long term and having a better and also greener renewable energy system and good energy transition.
I love the answer. It's a joint challenge.
Yeah.
It's generation and demand.
Yeah.
Cool.
In the end, you guys are already very accomplished in your career in the energy sector. What do you have as an advice for young people coming into the sector?
I would say love figures, love numbers, analyzing numbers, because energy transition and also these kind of things we're dealing about is a lot about putting the right figures together, having smart analysis. So I would do, if you love figures and are a quantitative person,
And
this is the most important one.
for you, Nikolaj?
Stay hungry for more, let's say, for more knowledge. I would say number one, and number two is keep it practical. I think, we like to hear having a debate about, transition, but at the end, transition happens on the ground with real life use cases, with real assets, with real people, and the transition, always needs to be practical. So keep that in mind, I would say.
I wanted to ask another short question, but it's about ancillary services that now that we went upon. Is a structural value for the future, or is like a gold rush?
I think it's security. We have demands, so ancillary services for security of supply. We need some amount. There's a value in that. The value is maybe now a bit higher than in the future. It can be satisfied a bit cheaper. There is a value for sure. And if we can satisfy that value cheaper, for example, with batteries, we should do it.
But it's something that it can be still profitable in the future, or is only now profitable?
No, I think we will need it.
Mhm.
It just by the physical logic that you cannot store energy, you just electrical energy, so you just need to have something on the reserve like this. And also, I think something we didn't discuss, but I think will be a use case for the future is the balancing services for the DSOs, for the local grids. This is still, this is just maybe starting in some countries across Europe, but it's not there. And I think this is going to be even more important with, let's say, future use cases of the batteries and PVs connected. You will need a battery there, not across countries.
Yeah, I just curious, but who would you like to see as a guest in a podcast?
And ask
And
what,
the
what
next one.
question.
In our okay.
Or who you would like to interview, for example. Just curious in energy sector with energy transition related. Any person, just dream.
I would go for battery manufacturers.
Okay.
Especially I think Europe is its own hub, but then the batteries coming from China are now here a lot. So I would like to talk with them to see how they think, how they see the transition we're having. So like an outsiders basically supporting our transition, seeing what they think. I would love to see that.
We did that for you.
You
You can tune it to the Energy Bridge channel and you will find some perspective from the manufacturers.
Very
Yeah,
cool.
we did one.
We'll check that one.
And you,
I would go for someone who really understands these kind of data structures, because like as a
but do you have a guru or some reference?
no, I don't have someone especially in mind, but I think at CyberGrid, someone who is putting all those data together from the assets, from the grid, from the markets, because that's what I mentioned before, this kind of ecosystem, which is, I think, crucial. And I really want to know, and I don't know really, because it's like something operational, where we are there, if we are really far off having a common ecosystem, or are we already quite close to having that in the energy, because is everyone having the same data format, standards, whatever? This would be really interesting in my opinion, because I think this is some missing step in the future.
Great. I like it.
Yeah.
So yeah, we have come to an end thank you very much for being here. I learned a lot. Thank you. And yeah, we hope you see you in our forum in June, the 2nd and 3rd of June. We're going to address this and many topics. There is one thing that you mentioned in the middle, that we should measure more to make the grid more intelligent. Just a spoiler, we are addressing this challenge as energy security as well, because it's critical infrastructure. So we are going to see the relation between energy security, but also smart grids and more intelligence. So stay tuned.
And also, if you guys want to share some last thoughts.
Yeah, thank you, Raul and Daniel, for the invitation. We love talking also to you, Nikolaj. Hope to see you soon. And thanks for the invite.
Gerne.
Mic drop. I think this was a good one. So
Thank you very much, guys. And I think it was a very insightful interview. I mean, we met Nikolaj just like that in Serbia, and we kept in touch. And we chased him for 6 months, and it finally happened. And with you, Thomas. So thank you very much.
Yeah, and thanks to the community for watching the episode until the end, and stay tuned for more interviews. See you.
Bye.
Ciao, ciao, ciao.